I start this week's video looking at Adobe. This has been one of the stocks I've had on my watch list for some time, and you can see here from the weekly chart, price remains below key trendline resistance. In my video a few weeks ago, I mentioned that Adobe was due for a pullback, and we got that this week and last week. Price managed to get as low as 640 and has found support there. There could be a small bounce here in price in order to retest that trend line once again, which would be around 673. As long as that trend line holds, further downside is likely in the coming weeks. The reason this stock is overdue for a pullback is look at the number of red candles prior to the last 2 weeks. We only had one red candle in the last 4 months, so this is well overdue a pullback. Also, I'll bring up this chart, which I've shown before, comparing Adobe's actual earnings to estimates. And you can see in the last 2 years, Adobe has only ever beat estimates on 1 quarter, yet the stock has rallied significantly. Another reason why Adobe keeps pushing higher is the number of upgrades it's had. We had 2 recently, with Barclays raising the price target on Adobe to $740, and then we had BMO Capital Markets also boosting the price target to $730. If we just have a look at the consensus here from brokers, not a single sell on this stock, with 23 buys and 4 holds out of 27 ratings on this stock. It just shows this stock has been pumped by the brokerage firms simply by hiking up the price targets, upgrading the stock without any underlying reason for why the stock should rally as high as it has. There was this headline, however, which came out this week stating that Adobe was entering the e-commerce payments business to challenge Shopify. Now, how that impacts their business model going forward will impact the stock. However, I still don't believe this is significant enough considering the rally it's had on very little fundamental driven catalyst as to why this stock should be as high as it is. Next up is Tesla. So Tesla hit our target of around 750, 753, which I mentioned in my last video. You can see price is now trying to push above that, and this will now be the immediate hurdle for bulls. You can see in this daily chart here, the inverse hammer candle on Monday, where price reversed sharply after being down, finishing the day higher, suggests price is well supported around the 40-day moving average, currently around 712. Price consolidating around the 750 mark does pave the way for a break higher, with the next resistance area around the 780 to 786 level. In terms of headlines, it's been a quiet week for Tesla. The only notable news story out this week was Cathie Wood's ARK fund continued to sell the stock, taking the total value of the EV maker's stock they've offloaded this month to about $266 million. However, that hasn't impacted the stock, as you can see, and it still remains their largest holding within the ARK fund. Next up is NIO. So you can see from the weekly chart here that NIO remains just above key trend line support after price could not make a breakthrough above the 40-day moving average highlighted. Now, the change in momentum is driven by the company's 2 billion share sale announcement last week, and that has continued to weigh on the stock. In the statement last week, NIO said it plans to use the injection of money through the stock sale to strengthen its balance sheet as well as for other corporate purposes. Also, concerns around China haven't gone away. This headline came out this week where the industry and IT minister said that there are too many EV makers in China and that the government will encourage consolidation. Now, that brings a whole new uncertainty in this sector, and that's why prices also lacked momentum. The key for NIO is that trend line around 35.60 to 36. That remains a must hold. A quick update on a couple of stocks. So we start with Virgin Galactic. Virgin Galactic continues to hang on to this 24 support area as price recovered from an intraday break off this level on Wednesday. This is despite UBS cutting its price target on the stock, citing supplier issues causing a delay in the next planned flight. Now, the sharp reversal on Wednesday could well see price head towards the 20-day moving average around 25.65. However, it's essential 24 is not lost, else another wave of selling could start, with price likely to head towards 21. Then we have Pinduoduo, PDD. Now, PDD remains constructive, and the daily chart shows price having a breather after running into the 110 resistance area. Price getting back above the 100 level is likely to give it momentum to have another run at the 110 area, whilst 95.40 will act as key support. So there you have it. That's my weekly update. Thanks again for watching. Do hit that subscribe button so you don't miss any future content, and I'll see you at the next one.